venture capital funds as well, mentoring startups and working with the regulators on the fintech regulations that were launched over the past 2 years, whether the central bank or the financial regulatory authority governing the non-banking financial service providers. And the results were actually absolutely amazing. We're looking at the fourth the ranking in Africa when it comes to the investments that actually flew into fintechs in the country. We come second in the MENA region. So Middle East and North Africa, we come second. In Africa, we come fourth. That's, of course, fantastic, given that we have markets like Nigeria, Kenya, South Africa, and the like. So we're really glad to be amongst the biggest four. 23% of the investment deals actually flew into Egyptian fintech startups, and actually 21% of the investment that flew into Middle East and Africa came to Egypt. Of course, that's a significant sign that the ecosystem is growing, the startups' quality and how investable they are is also improving. And if we relate that to Africa, of course, I'm happy and proud that Africa as a whole, I mean, fintechs in Africa received around $3 billion in funding this year, compared to like almost half or less than half that amount, 1.35 billion in the year 2020. So I'm really glad that our continent is finally on the slightly invisible and being categorized as an opportunity for investors and multiple players in there. So, I mean, if we look at our startups, we've got Obey raising like 400 million in Series C. We've got Flutterwave, 170. We've got Zipzy, previously known as World Rema, of course, raising 292 million in Series E. Chipper Cash, 250 million. So I'm really, really glad and happy and proud with the performance of the entire continent. Of course, I'm especially delighted that the Egyptian ecosystem is growing and is finally recognized amongst the four biggest markets in the continent. The majority of the startups that are currently operating in Egypt are within the payment and remittances sector or subsector, to be specific, around 34 of those. And then we have some lending and alternative finance startups, around 15. And the others are in accounting, are in personal finance management and literacy, payroll, B2B marketplaces, wealth management, RegTechs, even InsurTechs. We have 4 Roscoe models and open banking infrastructure, even agri-fintech, which is fantastic, of course, and prop tech as well. So a couple of years ago, all we could see were actually the payment fintech startups. So I'm really happy that the scope is expanding and they are looking into other sub sectors, not just the payments subsector that is there. And the global presence as well is really exciting and always happy to see Egyptian startups expanding regionally in the MENA region and the GCC and even in Europe. And actually 24 of the 112 startups that are operating in Egypt today have presence in other regional and international markets, which is absolutely amazing. What else? I mean, it's a result of hard work over 7 years, trying to facilitate partnerships, working with regulators on reforms, collaborating with other ecosystem players and enablers to offer opportunities to startups, matchmaking them with investors and the like. So I'm really glad and proud to be amongst the few who've actually managed to make that difference. So I'm absolutely left speechless. So thank you very much, Kwame, for the opportunity to shed some light over the findings of the report. And of course, I'm happy to answer questions.
Okay, thanks very much. That was quite insightful and informative. Yeah. So without much ado, I want to go back to Saqib. Saqib.
Hi. So let's see. You know, the fintech space in Africa, of course, it's very exciting. You know, let me start by maybe highlighting some of the issues, and then we can look at the opportunities, right? And the issues are not new to anyone. You know, we've all been in the business long enough. I think the one big challenge, first of all, that we all have is really the fragmentation of the market. You know, the US is one big block, Europe is one big block, India is one big block, China is one big block, but Africa is really 55 countries with different languages, with different cultures, currencies, tax, and forex regimes, and then even now licensing, right? So regulation is a big issue across, you know, different regulatory requirements across Nigeria, Kenya, Ghana, Francophone Africa, you know, and of course, even with Egypt and Morocco and Tunisia, very, very complex. And to the point of even looking at Ethiopia, which is almost untouchable, right? Ethiopia is such an insulated or, you know, market that is so difficult for anyone to do business in Ethiopia today. And yet we need that scale. You know, any one country beyond Nigeria or South Africa or Egypt is really too small to really get to any economy of scale. And so this is where we are hoping that this African Continental Free Trade Agreement really will add some value. You know, it's very important for us to have that economy of scale in order to grow. The other, you know, complexity of Africa is even the size of Africa. Africa is huge as a physical continent. You know, you could, you know, I've seen maps where they have put together, you know, the whole of China and the US and India and Russia all into Africa. So this brings with it the challenge of rolling out power and internet. And so the cost of infrastructure is quite huge, you know, but this is also an incredible opportunity. And we've seen so much growth in mini grids and micro grids and pay-as-you-go solar panels, you know, all sorts of systems. Innovation has come in to help cross that challenge and cross that bridge and reduce costs and serve previously unserved populations. But we must keep in mind this whole size of the continent. The next thing, which is either a crisis or an opportunity, really is the population projection. You know, by the end of the century, which is now barely 80 years away, Africa will be half of the world's population, with Africa and Asia really making up the majority of the populations. Asia will begin to decline and Africa will still be growing. And, you know, Europe and North America will be nothing compared to it. You know, and this will bring with it, you know, a huge need for food, for water, for housing, jobs, education, and services, you know, whether it's Facebook or WhatsApp or Netflix. You can imagine then the computing power that will be required to serve this growing population. I remember there's a statistic which says that Nigeria will be the third most populous country in the world. I think even by 2050, first will be India, then China, then Nigeria. So a huge crisis, you know, and yet an opportunity. And so we need to be ready. You know, this will come with a lot of challenges for human development. There are lots of slums developing, the infrastructure, you know, will not be there. You know, our governments are a bit behind with planning and developing this infrastructure. But there's an opportunity also for technology to ride over, you know, hopefully with machine learning, with AI. You know, today, look at, for example, transportation. It's a huge problem across emerging markets. And this is where someone like Uber has been able to step in. Imagine if we could bring that down to the trotro level, right? And create some sort of organized transport systems. Imagine the value that would add. And technology, of course, is best positioned to do that. You know, so there's huge opportunity here, and we need to keep in mind that the challenges that we are facing will only grow. You know, already the population is more rural than urban, at least in Ghana. I think in Ghana already the population is 60% urban and only about 40% rural. Once again, so that brings together, you know, a certain critical mass. Accra alone is around 5 million people, I understand. And the mega cities will be Cairo, Kinshasa, Lagos, you know, followed quickly by Johannesburg and then Abidjan. And to some extent, you can see that we are forming, you know, a corridor all the way from Abidjan to Lagos, one massive mega city. And it will be very exciting to see how these mega cities, already if you are traveling to Togo or Benin, you can see the amount of traffic on the road, and it's all cross-border, and there's a need. You see how money is changing hands and mobile money is changing hands across countries. So there's an incredible opportunity to once again address this movement of trade of goods and services, which is very exciting. You know, the next big issue is, of course, the lack of banking, you know, and this is where, you know, you've seen how people don't have bank accounts because they don't have identification, you know, they don't have addressing. And this is where mobile money has stepped in, right? And this is also linked to the huge informal economies that we operate in, right? If you take the population of Ghana with roughly 33 million people, and you took a working age of 60% today, right? That's about 18 million people. How many people are formally employed and pay tax and pensions? Only about 1.5 million people. So that leaves a huge market of 16, 17 million people who are not unemployed. They're self-employed. These are farmers, construction workers, hawkers, traders, and even high-value jobs, graphic designers, software engineers, consultants, doctors, lawyers, right? Uber drivers, micro, small, medium enterprises. You know, there are so many people in Abusukai who are running very successful businesses, but they are informal. And this is where mobile money has come in and allowed them to interact and go digital, right? So once again, huge growth in moving this previously invisible economy into a more visible economy. I mean, that is if the e-levy doesn't come in, and let's see what impact that has. But, you know, this is where then access to data and slowly working to formalize these economies and get people to become more formally employed and hire more people and pay taxes will be so important for our growth and our development. But these micro, small, medium enterprises also come with huge needs. They need credit, they need record keeping, they need access to all sorts of e-commerce capabilities, right? And no one is reaching out to do that. But you can imagine the potential if we are able to reach out and touch this huge informal economy. And it's not just across Ghana, whether it's Colombia or Venezuela or Cuba or Ghana, Nigeria, Egypt, Pakistan, Philippines. This is an emerging markets problem. So once again, any solution that we create, we should be able to scale it across multiple countries. You know, the other good news, of course, is that, you know, the telcos have been investing heavily in voice. And because of the infrastructure that I spoke about, we haven't got the the traditional fiber or the traditional cable infrastructure, but now there's heavy investment in fiber, there's heavy investment in 4G, 5G, and that will again help us to leapfrog, with the mobile phone, straight over the landline, over the computer to the smartphone, and now from the bank account, and once again, once smartphones are in place, you can imagine the data that is available for micro lending, for unsecured credit, for social scoring. You can imagine already companies, whether it's like MTN using call records, is able to offer instant loans to customers with a huge amount of money. This was a business that didn't exist 4, 5, okay, maybe 6, 7 years ago, right? And so many people are trying to roll out digital banks with the idea of this unsecured lending to the informal economy. And so smartphone penetration, now I hear people are trying to give out smartphones on credit, right? If you don't pay, they will cut you off. And you can imagine, so the more that people go onto smartphones, the more capability they have for education, for Netflix, for Spotify. They want to watch movies, YouTube, and of course, they'll want to trade and they'll want to interact with others. So huge opportunity. Mobile money, of course, has grown massively. We've seen the trend. Digital transactions now make up, in the past, it was cash in, cash out, and maybe airtime. But now we see a lot of bill payments and we see a lot of money staying in the wallets, right? In the past, it was people transferring money. So you cash out or you load money and instantly you cash out. But now I think a lot of money is being held on the float. And this will continue to grow if the governments allow more innovation and allow a lot more, alignment to the needs of people. I think you will see that this will continue to grow and it will be great. The banks are enjoying the float. The money is being used to build infrastructure. So I think the last thing anyone wants to see is a drop in this float in mobile money transactions. So, where is the opportunity? I think I've spoken already.
So before then, okay, thanks very much. We'll come back to you. So let me bring in Segun quickly. Yeah. Segun.
Yes, I'm with you.
Okay, so can you tell us more about the innovations, fintech innovations we have on the continent, especially can start from Nigeria or the West Africa regions? What are the types of the innovations that we are seeing, and what are their main characteristics, please?
Yeah, thanks a lot. There are different approaches to look at it. Some of those innovations are driven particularly by the specific market conditions. And just like Sakib was saying, it would be nice to harmonize the fragmentation so that we can have innovations that are easily transferable. So if you look at a market like Nigeria, for example, mobile money is not yet at the penetration level that we see in other markets like Ghana, Uganda, Kenya, and the likes. So something like, the introduction of virtual accounts as a payment method is something that is growing rapidly, both for online and offline payments in Nigeria, and also for wallet creation. And we are seeing the adoption being transferred even into other markets as well, and introducing that as a payment method across the continent. Another one that I think is worth mentioning is, the adoption of crypto. And that's a very tricky conversation because the regulatory environment in different countries have different position around how they perceive and how they treat crypto as a, the technology in itself in terms of, is it permitted? Is it allowed? But that hasn't stopped the adoption across multiple markets. Nigeria playing a big role in that, but other African markets are also adopting that very strongly. In terms of the other specific ones that are, coming across, we're seeing companies who are now trying to do a lot of cross-border payments. So if you look at companies like Cheaper Cash, you look at the meal strategy that companies like Flutterwave are also pursuing with their with the expansion of their Barter app, and even other similar companies. We are seeing companies who are now trying to, really focus on that, making Africa a single payment market. So aggregating different payment methods, making it possible for someone sitting in Uganda, in Kenya, to easily transfer money to someone in South Africa, to move money from Nigeria to Zambia, and just connecting that rail in a simplified way, through the mobile apps and handling all of the, the multi-currency underlying infrastructure on the background. And then that is also leading to things like, the super apps, where a lot of these payment companies are now onboarding and unloading additional features. So we're seeing, companies that are now including ways for Africans to trade US equities. In the last 2 years, that's something that has gained a lot of popularity. And the adoption is being driven by, these companies who have multi-country reach and multi-country exposure. And then they can start in, say, Nigeria, very quickly expand it to Uganda because they're already serving that market, and then move from there also to Kenya. And that's another thing that we are seeing in terms of new opportunities and innovation. There's also the growth of like QR payments, just still sticking to payments. But from my observation, I don't think that's something that has been adapted in multiple markets. So we've seen it grow in some parts in Nigeria. The adoption is growing significantly, but I'm not sure it's something that is, that has penetrated as much in other, say, in East Africa, where we are just now seeing the uptake of cards in addition to mobile money payments, both for merchant payment and also for peer-to-peer transfers. Another one I would like to also very quickly touch on is just which is very similar to the super apps and the consumer payment app, is just the proliferation of the digital banks. And this is a function of just the customer expectation and the new infrastructure that is now available that makes it possible for banks to be offered purely digital without you needing to open a branch. And then a lot of people are leveraging on collaboration, partnerships. So even in countries where you do not have a license, you can work with a local partner, because the infrastructure that you needed to open a bank branch before now is not necessarily the same thing that you need to do that now if you're offering strictly a digital bank. So those are some of the trends and some of the new innovation across markets that we are seeing. And the last one, just before I go, is the proliferation of API-first companies as well, where a lot of services, from people having access to their bank data, their mobile money data, their transactional information, through third-party applications. So there's a lot of thought and work going on around how do you enable open banking so that banking data is easily transferable. That is something that is happening, in places like Nigeria. There are companies like Mono, Okra, Stitch, similarly in South Africa as well. And this is quite more popular in bank-led countries where the banking infrastructure is more proliferated. But we're also seeing it being adopted even within countries where they have the payments rails run more on the mobile money infrastructure. So these are just, just to mention a few in terms of, new innovation and adaptation of what we're seeing within the fintech space across board, and more so concentrated on what I'm seeing from my own perspective from a Nigeria standpoint.
Okay, thank you very much, Shegu, for that insight into innovations on the continent. I want to go back to Gerard. Gerard, can you tell us a bit more about collaborations happening, which are facilitating fintech innovations across the continent? As Gerard is speaking, if you have any question, please drop it in the chat. We receive other questions before the webinar. I'm going to be posting those questions as well soon. Gerard.
Thanks, Kwame. I think collaborations are one thing that we are crying for within the fintech sector. And as we're looking at the region, Southern Africa per se, and maybe even as we go north, the biggest thing that we've seen so far is where probably is the easiest one, where the banks have had to partner with mobile money for transactions like your bank to wallet, wallet to bank, and many other stuff that you can do. So instead of you walking into an agent shop to cash in, you can actually then withdraw from your phone, from your mobile money app. You access your bank, you withdraw, then you make your payments. So you actually don't need to visit the bank. That's one of the biggest collaborations that we have found happening down here. And also the second biggest one that I've seen, remember we said mobile money is the biggest thing that has happened this side of the continent. You also then realize that the mobile money then became more like the foundation of everything that is happening within the fintech space. So if you're looking at people paying their insurance, majority are now doing it through mobile money as well. So that's another partnership that I also thought about, where mobile money, okay, the fintech, like our one here in Zimbabwe, EcoCash, also has a sister company called EcoSure, where payments are actually then deducted from the mobile money wallet. That's another collaboration that I'm thinking of within the fintech space. Then over and above that, we have the remittances, where the money MTAs, the money transfer agents, are also then partnering with the same fintechs that we're talking about, where funds are being sent from the diaspora and are terminating in the mobile money account. That's one thing that I see that has been helping even the poor at the bottom of the pyramid. So instead of them having to walk to find an MTA agent, they are actually then having to just use whatever they have that has been deposited into their mobile money account. But if you then look at it for countries like Zimbabwe, you have a situation where you're receiving your funds in maybe US dollars, but you can only, or maybe you want to use them in the local currency. So there is also part of the fintech innovations that has also been added to the mobile money wallet, where you can actually then exchange your foreign currency on the mobile money wallet, and it goes straight into your local currency wallet using the official exchange rate, of course, which is different from the paro. But that's one thing that is also another thing that is exciting. But when you then, to add to that, some few years back, we had instances where we had a partnership where MasterCard partnered with the mobile money providers in Zim, where you were actually then able to use your mobile money card across the borders. When you travel, say you're living in Zimbabwe going into South Africa, you can then carry your mobile money wallet card that you can then use to transact as you make payments across the border. So yeah, I think like the last speaker was saying, collaborations are things that we really need in terms of developing the fintech space. When you look at the APIs that he was talking about, I'm looking at situations where I want a bank or an MFI to be able to give a loan to a customer who only has a mobile money wallet. It's not happening as yet, but it's something that I think it will actually then help us when you talk about financial inclusion. We are going beyond transaction accounts. We're now talking about real financial inclusion. So these are the things that I think can actually help us as we develop in the fintech space. Thank you.
Thanks very much for that. So we receive a lot of questions. I'm not sure we can go through them throughout this session, but I'll try to post as many as possible. We're also live on Facebook and YouTube. So Noha, one of the questions that we got from the registered participant was to look at the human capital. what is the assessment of the human capital we have for fintech innovations or fintech in the continent or the experience from your home country? And how can we ensure that we build the capacity to be able to deliver some of these innovations on the continent that we have a lot of issues that demand solutions?
Thank you very much for the participant who actually raised that question. We are a young continent. 60% of the Africans are under 40 years in age. When it comes to education, it's although according to international standards, we may our schools or universities may not be offering outstanding education, but we definitely have really smart techies, and we have a huge number of university students and graduates every year. If we look at Egypt, we have more than 3 million students that are currently studying at universities around the continent. Those, of course, are between engineering, business, medicine, and the like. Around an average of 500 or 600,000 of those are usually engineers. And we are really, really good when it comes to engineering as the country, all sorts and types. So the continent has smart techies. What we may lack in there is not the absence of talent as much as it's the inefficient utilization of talents, or the fact that we have people with industry expertise and the like not starting up their own businesses. So they would rather keep the jobs and look at safety and security than to actually build or start their own business. And we really want to ignite that entrepreneurship spirit in our youth and drive them towards having that in mind, like starting their own business. Once, of course, they've acquired the know-how of a certain industry. I wouldn't encourage a fresh grad to go start their own business if they haven't already worked the industry before. I want to encourage people with industry know-how to partner with techies if they lack the technology background to actually build their own fintech startups. Do we have shortage in talent? No. Can we do better? Of course, yes. And the issue is not much of the fresh grads being unsuited for the market and the industries of the future. It's also the fact that we will need to reskill a lot of the existing, a huge chunk and percentage of the current workforce that we have around the continent in order for them to continue to be productive and contribute to the economic growth of their countries. So definitely there is a huge need to reskill in there, introduce them to technology that is going to be part of every industry and has already started to be part of every industry that there is, not just fintech, education, and you have edtech, medicine, now you have telemedicine, remote medicine, and the like. So every industry now has technology at its heart. Technology is what is driving innovation across all of those industries. So we definitely need to have more technical schools. We definitely need to have more technical universities, and we need to encourage girls as well to get into STEM, because and we have that saying in Arabic that you cannot clap with one hand. And when around 50% of the population around the continent is females, if those are out of the workforce and are unable to contribute to the national GDP and the growth, you're a crippled nation. You are walking on one leg, you're limping. So we need to encourage girls to be part of, to actually study science, get into STEM and be techies as well. And we need to offer those opportunities to those girls who have who lack the access to such opportunities. Thank you very much.
Thanks for that. Before I will let you go, cryptocurrency, blockchain is always a subject that comes up. What can we do about it? Especially, it's innovative enough, no doubt, but still there are a lot of regulatory issues around it. Your point.
Okay, well, I'm going to give you, say my 2 cents on cryptocurrencies. And I also like to highlight that there is a huge difference between the underlying technology, which is the distributed ledger technology, and the crypto. So in everybody's mind, blockchain is associated with cryptocurrencies, and this is not the case. Distributed ledger technology, known as blockchain, has multiple valuable use cases across multiple industries, especially the financial industry and trade. So let us just first separate those. Now, trading in cryptocurrencies is mere speculation. I mean, when you look at how currencies are valued, they are usually tied or backed up by an asset in there. Cryptocurrencies are not tied to any asset that can tell us how valuable that currency is. It's mere speculation. So people investing in cryptocurrencies are mainly gambling. There are no rules in there. There is no, I would say, transparency in the trading that is happening. So would I do it? I have never done it, and I would never advise any to do it. However, it's not all bad. The innovation, I mean, the cryptocurrency itself as an innovation can be beneficial and help to overcome those barriers to integration around the continent. So when Saqib was talking, he mentioned that the fact that we have multiple different currencies in the continent and regulations and the like, it makes it really hard for economic integration of the continent. A cryptocurrency can overcome those barriers. We can have a cryptocurrency as an African currency that trades against all the local currencies, eliminates our dependency on the dollar, and of course, the implications that causes and brings to the table. So those are my 2 cents on cryptocurrencies. Thank you.
Thanks very much, and I think that was a very good answer. Yeah, Shegu, Nigeria is the hotbed when you come to cryptocurrency. So the question that we have is that how do we do regulation at the same time enable innovation? So how do we maintain that balancing act?
Yeah, that's the $1 million question, right? Because Noha was right in terms of the risk around the speculation and gambling, like she put it, happening within the crypto space. And when for people who are not well informed, it can be very disruptive if you're not being very careful. So that's why sometimes we see the regulators take a very strong stance against it. But it's a situation of you don't throw away the baby with the bathwater, right? It's being able to just, first of all, the regulators investing in understanding the possibility. And we are seeing some regulators do that. So for example, in Nigeria, the Central Bank of Nigeria introduced the e-Naira, which is a central bank digital currency, which still leverages on the same blockchain technology that a lot of these cryptocurrencies leverage on as well. So that's actually a step in the right direction towards adapting and adopting this technology from the good side of it. Where there is a bit of a dilemma is because the technology naturally lends itself to decentralization. And for a government or for a regulatory authority, you need to be able to control the economic activities within your territory. And when you have a technology or you have a system that operates outside the confines of that system, in spite of the advantages that comes with that, there's also the concern around, control. You have economic policies and how you want to influence things. And when this is outside that system and outside that control, it has an implication. So for me, my recommendation would be to both parties, in terms of the party that is driving, or those who are trying to drive innovation in the crypto space, and also from the regulatory angle. There has to be first a bit of an open-minded approach where the regulators invest in actually understanding the possibilities and the positives that comes with crypto. And the innovators who want to leverage crypto as well needs to be willing to have a conversation to say, okay, we understand the risk. These are the measures that we're putting in place to properly educate the populace so that they know what they're getting into. And these are the positive use cases that cryptocurrency can lend itself to. So just to give an example, the stable coins like USDT, USDC that are pegged to the dollars have very limited fluctuations or volatility as compared to the thousands of other, typical cryptocurrencies like Bitcoin, Ethereum, XRP, and the likes. There's a lot that can be done in terms of innovation that is possible just leveraging on the USDT and the USDC. And we are seeing that happen already, where people are using it as a way to, pay their suppliers in different parts of the world, receive payments from different partners and customers in different parts of the world, just because there's some stability in that. And then they convert that to fiat, because between the period where when the transaction happens, they can be assured that there's some stability, and it's basically pegged to the US dollars. So there are ways that the positives can be harmonized, but there just has to be a better understanding, and then a better appreciation, and then more collaboration in terms of, let us come together to harness the positives of cryptocurrency, as opposed to seeing it as, these guys are the ones who want to take over the system. They want to just expose people to something that can be, that they don't understand and that we ourselves don't understand. And then you just take a very, brute force approach to just banning it outrightly, or just, discouraging the use and just coming out very strongly to prohibit it. I think that approach is just going to lead to more activities happening on the ground. And that's what we're seeing in Nigeria, for example, where the adoption since the regulators came out to say they do not support crypto activity, the adoption has since grown, which the policy was supposed to achieve the opposite. But the thing is that what we've seen is that, as opposed to those activities happening within the confines of the official, formal financial system, a lot of it is happening on the ground. And it's creating a lot of, sort of a black on the ground economy that is even more disruptive than the actual crypto happening within the formal institution itself. So it's a tricky one. It requires deeper levels of engagement and understanding and appreciation. And it's just something that a lot of all the stakeholders involved just needs to come to the table and give it some more thought. And we all have to just contribute our quota to helping the government, the different stakeholders better understand the positives while putting necessary measures in place to mitigate the risk that also comes with something of this nature. But it's an impressive technology that, irrespective of the actions of government, is just something that has come to stay. Yeah.
Okay, thanks very much, Shegu, for that insightful response to a very tricky question, as you said. I want to open the floor up, so if any of our participants have a question, you can type it in the chat or raise your hand. We can call you to pose the question to our panel members. Whilst we wait for that, I want to go back to Sakib. And unfortunately, time is running. We have done 1 hour, and I think we have only a few minutes to go, but we have a lot of questions. So we need to bring the session to a close very soon. Sakib, if you are supposed to become a prophet and give us a prediction, what will be the critical innovation that will come or we'll see in this space in the next couple of years in Africa?
That's very interesting. Personally, I'm a believer in actually leveraging existing innovation. I feel that there's so much, so I'll come back to your question, but let me tell you how I really feel first. I feel that there's so much existing technology that we're not using. I mean, look at the amount of power today, the computing power in a normal iPhone. What Siri can do, right? I can tell Siri to write an email. I can ask Siri to create an appointment. I can ask Siri to direct me to a location. I can ask Siri to play music of anything, any kind of music anywhere in the world. I can play it from my iPhone today, right? Look at mobile phones. Look at even feature phones. You know, how much of even voice technology that has been around for 40 years, how much of it are we using? So I don't want to, keep on creating new technology and thinking about new technology. I really think that we should look at what we already have on the ground, and we should figure out how to use it better, how to use it to solve the real world problems that we have in our part of the world. Poverty, education, the informal economies, trading. How do we make lives better for ourselves? Everything is a problem. Right? Look at the cost of real estate, look at the cost of transportation, look at the cost of lending, credit, mortgages, right? So let us see how we can use existing technology to solve our current problems. Now, if I had to step ahead, then the complete opposite of that is artificial intelligence. I really feel that will be a game changer for us. And we are, once again, AI will help us to leapfrog. I'm not so worried about AI reducing jobs, but really considering the kind of inefficiency that we live in, right? I think AI will then be in a better position to help us, for example, map out our cities, create a more, a working environment that will be more useful for us to create trends, to help us to create certain, because we have no data, we have no understanding of the segments of our society. Today, can anyone tell me how many people are between the ages of 18 and 25 and work in a bank and are women and buy, a certain kind of phone? And those are the kind of data that we all need in order to create very specific solutions and services that meet the needs of our people. So my answer to you, let us try to see how we will use existing technology, tried and tested and underutilized, and then jumping ahead, I am looking heavily at AI to help solve the problems and bring us to speed with the rest of the world.
Thank you very much. I see a hand up. Can the participant unmute and ask the question, please?
Sorry,
Hello.
if it was me, it was by accident. I'm sorry.
Okay. Do you have a question or not?
No, I don't.
Okay, that's fine. Okay, thanks. Yeah. So I have a question from Michael. What are your views on the impact of government policy on financial inclusion in Africa? What are the situation in other African countries? Are the policy progressive or retrogressive to digital inclusion? So maybe, Gerard, you can attempt that to look at government policies on inclusion.
Thanks, Kwame. I think the issue to do with government policy is quite a hot one, to use my two senses. When you look at it, if you're looking at the policy from a government perspective, you realize that sometimes what they're trying to do is to find a way to maybe manage their budget, get revenues, which could be a good way to because the only way that they can do it is, I mean, the only thing that people are using now is mobile money, and these are financial inclusion initiatives that you're talking about. So from the government, yes, the motive may probably be another way of getting their revenue. But when you then look at the users, we're looking at the people at the bottom of the pyramid, you and me and my countrymen in Zimbabwe. When you look at the tax per se, the levies that Michael is talking about, there are chances that they will actually reduce the number of transactions, even the volumes of transactions that will be going through the mobile money. So at the end, of course, we will not say cash is our enemy, or we'll try and say we want mobile money to at least be the same as cash. But the moment you then add a tax on top of that mobile money transaction, then it means cash is now far ahead of mobile money. People will then revert to cash. So I have a feeling that taxes, yes, in as much as the idea of raising revenue is noble, but I think the end game is whatever they are going to collect will actually be will continue to decline as people start going back to using cash again. So policies sometimes, yes, they do promote financial inclusion, and they also hamper financial inclusion depending on how the governments are using them. Thank you.
Okay, from your side, the future, if you see the future, what's going to happen in terms of innovations and fintech development on the continent?
Yeah, that's a hot one. But I would like to agree with Sakib. So when I wake up in the morning, I put on my watch. It tells me that my heartbeat is now high, this and that. You need to rest, in time to stand up and stuff like that. So I'm looking at a situation where the same watch would be able to tell me that, look, your consumptive spending has gone too high, higher than dangerously high that you can't even save. Your savings cannot even cover you for the next 40 years. So these are things that I mean, in my crazy mind, I think will be the next best innovation that we need in Africa. Like Sakib was saying, we need pensions. The biggest problems, like I was in an article that I wrote before, the biggest problem that we are facing as a country is old age poverty, where my mom was selling at a vegetable store in our high density suburb. She's still there because their only insurance was me. But because of the economic situation, I also then become a dependent. Even at my age, I'm still dependent because things went bad. So if we can have an app that is artificially intelligent to be able to tell us that your spending is too high, you need to save. Your spending is too high, you need to put money in your pensions. You need to invest. There are capital markets that are open for you. You can buy so much with the money that is in your account, and you're probably getting a return of so much in probably maybe a year or in a month. So I think we really need that innovation that really tells us what needs to be done in terms of my finances. The same way my phone tells me my heartbeat is too high. Thank you.
Very, 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 very interesting proposition. Yeah, thanks for that. Shegu, I have a question for you. The question goes, what has contributed to the adoption of cryptocurrency and card exchange in Nigeria? And how will you advocate for its adoption in other African countries?
Yeah, very interesting question. Thank you. I think that's from Ernest. So it's two different things. And I would like to start with the card one. So the interesting thing about Nigerian market, similar to the South African market, has been that compared to a lot of other African markets, the card adoption is significantly high. And it's a function of the nature of the market because of the banking system, where the payment system is heavily reliant on the banks, and the banks have also significantly matured over time due to regulation, due to growth, due to adoption, and also due to very deliberate attempts by the regulators to sort of delay the introduction of things like mobile money in the market. Having said that, I think it's only a matter of time, and we're beginning to see that in terms of card as a payment option being, even though the adoption is growing, we're also seeing other competitive and other options growing even faster, and customers and merchants now preferring to transact and make payments through other channels outside just card. So for me, if you have say a mobile money system, I think it's a lot faster and even simpler than using your card. But there's the cultural part, where if you're used to something and it's something that people have been using over time, and it's what is available and what works and what people know, people just don't drop it overnight and say, oh, because there's something else, we're just going to abandon that and jump to it. So for me, I wouldn't, they're the type of transactions that card naturally lends itself best to. So for those type of transactions, we'll continue to see card adoption grow. And that's what we're seeing in some other markets, where they are, even though they are mobile money-led markets or cash-led markets, we are seeing card transactions begin to grow for those type of transactions. But for the majority of transaction types in a lot of African countries, I wouldn't strongly advocate for a card type payment method per se, because there's just a lot of other options that are just naturally more appropriate for these markets. Now, for the adoption of crypto in the country, it's a that's a whole conversation in itself, because there's a couple of things. I'll just touch on a few ones. The big one is really around the currency fluctuation of the naira. So over the last few years, it's something that happened regularly, but over the last 2 years as well, we've seen significant devaluation of the Nigerian naira. And as a result, a lot of people are beginning to look for alternative ways to, hold the value, or maintain the value of the money that they have. And one of the, promise in quotes of crypto, at least from a speculative angle, is that they can use it as a way to, either with a stable coin, to hold on to the value of their money, or in some cases even get an appreciation on their money. So the economic situation of the country is actually, from a currency perspective, is actually driving a lot of crypto adoption in Nigeria. So that is just one thing. The second part of it, which is still economic, is, Nigeria's gone through a few recessions in the last few years. There's been a significant economic struggle, and Nigerians are very restless and aggressive. So people are desperately looking for things to do that where they stand a chance of actually, making some money. So there's a lot of speculative activity going on as well, which crypto naturally lends itself to. So you see people who will be like, oh, I bought Bitcoin when it was 10,000, and then it went to 60,000, and then everybody wants to be a part of that. It's similar to the same reason why we are seeing a lot of the betting companies, growing ridiculously and doing ridiculous numbers. That's not a use case that I would advocate for. And of course, it has a lot of negative implications, but it's just the reality of the economic situation of the country. And we're seeing that as something that also drives the adoption of crypto. The third one is the fact that Nigeria is a massive, massive trading economy as well. And for money movement, there's a lot of capital controls in terms of how easily you can move funds out of the country. And we're seeing that a lot of people are using crypto as a way to naturally get around some of these constraints around moving money between countries, or paying their suppliers, or getting access to USD. And that is also driving a significant, especially the high value type transaction, it's driving a significant crypto adoption in Nigeria. So a lot of these things are very nuanced, and they're very specific to the context of the economic situation of Nigeria. But I don't think Nigeria is unique in all these cases. There are also other countries that we've seen the similar economic scenarios that has also meant that people have explored and are also adopting crypto as an alternative. So yeah, I'll just highlight those few ones, but actually it's a lot deeper than that. But I'll just leave it with those three key drivers.
Okay, so let's talk about the future. Can you be a prophet for a few seconds and tell us about the future of fintech development on the continent?
Yeah, I mean, yeah, I don't like to make predictions, so I'll take it from the approach of some of the trend that I'm seeing and what I think would continue to happen. So at a very high level, I strongly believe that as over the next few years, we're going to see a lot of financial services and financial transactions happen outside the confines of the banks. It's already happening. You can easily say, oh, the telcos are, mobile money is led by telcos and all of that. But we're going to see a lot more of that. Companies that you don't think of as banks or financial services companies, a lot of them are going to be offering, different financial services just because they have the context, they have the data, they have the customer relationship that naturally lends itself. So you see a payroll provider providing payday loans. You see a lot of big card distributors giving asset financing. So, personally, I'm very bullish on the emergence of more embedded finance type innovation in Africa, just because of the way the continent is structured. And, we're already seeing a lot of that in even things like, if you look at how a lot of financial services are distributed right now in places like, say in Ghana, a lot of credit happen within the MTN ecosystem, that it is not necessarily a bank, but the biggest, if at least one of the biggest credit consumer lending companies today is actually through the Momo network. And so we're going to see a lot of that, from insurance to investments to credit, just different financial services being offered by non-banks and non-traditional financial institutions.
Thanks very much for that. I think we have to it's getting very exciting, but we have to bring the session to a close. Sakib, Gerard, do you have any final words in 30 seconds?
Thank you. Thank you for organizing this. My final word would be for all of us to keep in mind, our responsibility also to society and to create a positive impact. As much as we're here as fintech, as technology, as entrepreneurs, I think we should understand also the challenges that we are existing around us and look to provide solutions that will also help lift up other people's lives. Thank you.
Gerard?
I think I see someone has a hand up.
Yes, my name is Sadiq from Emergent Payment Africa, Ghana. My question goes to Noha. I don't know if she's still online.
Unfortunately, Noah has left us for another meeting.
Okay.
But I can still pose the question. We'll pass it on to her, please.
Yes, so then I'll prefer Gerald to answer the question.
Okay, go ahead.
Yes, I wanted to know, looking at the challenges that financial institutions are facing in Africa, especially for financial inclusion to be at the highest level for impact driven, but there are a lot of significant businesses that are thriving on that aspect. So I wanted to know what can be done to drive this impact, especially when we look at the informal sector in Africa.
So, Gerard, can you respond to that quickly about how we can promote financial inclusion?
Okay, let me
30
try.
seconds.
Okay, let me try. I think in short, I would say there's need for the policymakers and the informal sector as well as the fintech innovators to be working together. So in short, because of lack of time, I'm promoting the use of sandboxing, where the regulators are actually working hand in hand with the innovators.
Thank you. Shegu, 30 seconds. Shegu. I'm not sure. Okay. So without much ado, I want to hand over to Martin to formally bring this session to a close. Martin.
Yeah, thank you, Kwame. I think, as you've heard from my colleagues, this has been some very interesting discussions we've had so far, as it relates to fintech development in Africa. And as speculated or revealed by the panelists, we can attest to the fact that fintech development or growth within the African continent is just beginning, and we see a lot of funding and investment opportunities, and the products or services that are being built by these startups or companies have continued to grow astronomically, So as already envisaged, 2022 obviously would see the most growth in the industry, as experts predict, to the previous years. And I would say that currently, in just about 7 weeks of entering 2022, we have witnessed investments into the fintech industry worth over $1 billion US. That is testament to the increasing desire and development we see happening across the African continent. Now, I think Kwame left me on the back burner for quite some time, and so Sakib did some justice to Ghana's fintech ecosystem. But I would also like to throw some more light on that. And now, almost 50% of fintech founders and players, as per a recent poll conducted by the Ghana Fintech and Payments Association, revealed that above anything else, venture capitalists and angel investors should start looking towards the Ghanaian fintech ecosystem, which, as a foremost fintech hub, we are tightening our belt to link our brilliant fintech startups to adequate funding to boost the industry. And I think that doesn't take just a year or two, as revealed by Noha, where she indicated that this journey of having Egypt or the Egyptian fintech ecosystem to be amongst the top 4 in Africa is quite has to take a number of years. And that's what she mentioned, that the journey has been long, but the rewards are very are out there for everybody to see. So, and alternatively, from my perspective, Sakib did mention something about the e-levy that we are seeing coming to fall within the fintech ecosystem or the mobile money fintech system in Ghana. Alternatively, I think we must begin to see technological influence in our day-to-day lives as a force for good, which also means that leveraging it to achieve the public good, where public entities and regulators must work closely with each other, and by so doing, they can keep up with the pace at which we see new technological innovations, which have been discussed by awesome panelists, rather than introducing stifling policies like the e-levy, which hitherto would reduce or curtail the gains that has so far been made in financial inclusion in Ghana. We've heard about blockchain technologies, we've heard about cryptocurrencies, AI, and how these developments are changing the entire financial transaction ecosystem on the continent. And I think these discussions must not end here. Myself and Kwame would go and then always count on our panelists to always have these deliberations, because I think in as much as we are time is fast spent and against us, I think most of our panelists and participants wants to have more. So we'll be bringing this more to your doorsteps, both virtual and in person, so that we can have these discussions going from time to time and spread the information, and the discussions can be, made very lively and easy for everybody to understand. So thank you for coming. I would hand over to Kwame now to say a few words if he has anything else to say. Thank you.
Now, just to say thanks to everybody for participating in this session. We'll have a report from this webinar. And as Martin said, we would love to have more sessions. So thanks to everybody. And maybe this is a time for everybody to turn on your, unmute yourself, and let's give a big clap to our panel members. So please, let's do that. You can turn on your videos also here. So let's give a big clap.